On IND days that WRC has been conducting since last April. Every Tuesday we are having Tuesday or Wednesday we are having a session on IND days where some very important and interesting topics are discussed. And so today we have a very important topic, audit documentation. That is actually the talk of the time right now, with so much scrutiny from the regulators, NAFRA, everybody on the audit documentation. And when so many expectations are there, possibly audit documentation is the only thing that is our defense on, or our proof that we have done our jobs well. So yes, today we should have a very interesting topic. Before we move further, I would just request everybody to come to attention for the ICI motto.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं पुरुषो निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता
Thank you, Mishra ji. So yes, coming back to the topic, the topic today is audit documentation. What is the importance of audit documentation? How do you ensure that you have sufficient and appropriate audit documentation? And today we have our two learned faculties, CA Pritesh Maheswari and CA Sanjay H, who will be walking us through how, in a practical scenario, what kind of documentation you can maintain, what is the absolute essential, how you can enhance your documentation processes within. And I know, and all of us would have experienced it, especially when the audit season comes, the documentation part becomes a little difficult, practically speaking, because you have so much pressure. But then again, this documentation is one which actually goes on to prove what processes and what audit we have done. And so it's absolutely essential. So I think today we should have a very interesting session. I'll take this opportunity now to introduce our two speakers. We have with us CA Pritesh Maheswari, a practicing chartered accountant with more than 17 years of experience, and he is also a postgraduate and a company secretary, and is based out of Mumbai. So welcome, Pritesh bhai. Thank you for accepting our invitation to address this gathering. Yeah. And we also have his co-faculty, C. Sanjay H, who is again a practicing chartered accountant with more than 12 years of experience, and he is also a graduate in commerce. And both of them work extensively in the India's fields, and I think and audits, and they being their core subject. So yes, I welcome both of you to this session.
Thank you.
Sanjay ji, thank you for accepting our invitation.
Thank you very much.
Without taking up too much time, I think this should be a long session also, because yes, it's a very detailed topic. So I would not like to encroach on the faculty's time. So I would hand over the session to Pritesh ji and Sanjay ji. You can please take forward the session. Thank you.
Thank you, Rahul ji. And this was really a very brief introduction to the topic, today's topic. And as you rightly said, that this is gaining importance every day, as we are facing a lot of complex accounting, auditing in the field basically, and looking at the experience to the extent what we need. It is very important that the way what work we do and how extended, to what extent we are documenting, that becomes very sensitive and important. So thank you for this, and thank you for our introduction. So today we have got this opportunity from WIRC to discuss and share our perspectives around the audit documentation requirement. And we thank you, WIRC, for this opportunity. And thank you all to pull out time during this quarterly review season and attend this session. So we will be covering aspects around audit documentation as required by the auditing standards issued by the Institute of Chartered Accountants of India. And we will also try to cover some specific aspects of documentation around specific audit procedures and certain practical examples. So we will take you through examples like what kind of basically document generally is expected, or minimum document one should or one shall try to attempt, because that would again have been will be changing in terms of what we are the kind of transaction complexity, nature of industry of your client. So that will be varying. And we will also discuss the stages of audit and the extent of documentation that one may consider to be minimum. So while this topic per se appears to be very simple, and it assumes that probably it's okay, documentation and all, I think, but it's all important to demonstrate a lot of skepticism, professionalism in terms of understanding the sensitivity of what documentation is and how important it is for someone. And while studying, when we got to the field of CA, basically as in CA, maybe Sanjay, you may want to just put across the presentation here. So when we got to study, we started with that work not documented is not done. So that's where the foundation was laid down, that how important the documentation is for us as auditors. And hence the documentation comes at front and foremost of whatever work we do. And maybe a lot of things we may be discussing today would be kind of repetitive, but everything will be put to the context, and hence while there may be repetition, but we may need to just bear with it to the extent to understand that what are specifics required. Okay, so we will start now, and let me quickly familiarize you what exactly are we going to cover today, because we have around 1.5 hours to cover, and we will definitely try to take the questions whatever comes in. So today we will be discussing largely around introduction and requirements of ASA 230, which is audit documentation. And we will also try to cover a few aspects like on the audit documentation stages, like at pre-audit, planning, execution, and then conclusion, like what kind of documentation or things one need to focus on. We will also try to cover some aspects around external confirmations, around auditing estimates, around auditing related party transactions, going concerns, subsequent events, internal financial controls. We'll also try to put some light to the work of experts, that how do we use them and how do we document them. Then we will try to put some thought process around contents of good quality documentation and examples, and then key takeaways. While audit documentation is certainly important, much important for auditors, but at the same time, we will try to cover a few aspects where it goes beyond auditors as well. So management assessment and documentation, that what best, or try to see that what management should at least consider to maintain the documentation level and the relevation, and thus the relevance of documentation beyond audit. So we just start quickly with the introduction and the basis and the base where it comes from, the requirement of documentation comes from. So Companies Act mandates us that companies are supposed to be audited, and our audit should be conducted in accordance with the standards of auditing. And hence our overall objective as defined and as put across under SA 200, it says that it is to obtain reasonable assurance and to report on the financial statements and communicate as per the requirement under the auditing standards. So communication is something that we do with gross charge with governance. So because we as auditors are responsible to make sure that we are auditing right and communicating if we have any observation. So how do we document our work and what we are communicating, that becomes important. When we talk about to obtain reasonable assurance, it means that reasonable assurance is giving back to the shareholder, first of all taking us and then giving back to the stakeholders who are the readers of the financial statement, that those financial statements are free from material misstatement, whether by fraud or error or whatever, and thereby enabling us as auditors to issue an opinion thereof, whether those are prepared in all material aspects in accordance with the framework or the laid down accounting standards. So SA 200, where it says the auditor shall comply with all relevant standards, it also says that it shall deal with the responsibilities of the auditors as auditors. Okay, Sanjay, we can move to the next slide, please. And same way, so 230 continues that documentation has to be sufficient. It can be extensive to whatever extent. One may not consider something important, other may consider something important. So there may be different perspectives. It can be subjective, but at least your documentation has to be sufficient to enable anyone, any experienced auditor or anyone who doesn't even have previous experience about connection with that particular audit. They should be able to understand the manner you have documented. So your document need to include the nature, timing, and extent of your audit procedures, and that all needs to be in compliance with SA. So where we say repeatedly that it has to be in compliance with SA, because our auditing standards are extensively laid down to cover almost all aspects that what needs to be done to make sure that audit is being done effectively and efficiently. So our audit procedures needs to be performed to comply with those and applicable legal regulatory requirements. The results of audit procedure performed, that should basically be documented. What kind of audit evidences we have looked to, what were the significant matters during the auditing, and how those conclusions, whatever conclusions we have reached on those, how those were being evaluated, verified, what were the basis to reach those conclusions, and any significant judgments we have made, any estimates that management applied and we have tested. So how we have done those, I think all those needs to be documented appropriately. So in terms of documenting the nature and extent, one has to also be very clear. I'm just summarizing it. It has to be very clear that you document the characteristics of the specific items or the areas what you are adopting. And very importantly, whenever doing any documentation or reviewing any documentation, try to make sure that one has to include that who has performed the audit work, execution there, put the date, who has reviewed the execution, put a date there, and your documentation shall discuss all significant matters. Whatever SA 260 says that it should be discussed with those charged with governance, I think those all judgments and communication, wherever they has to form basis from your documentation. So make sure that it is not inconsistent with your conclusion. So auditors shall basically, and once documentation is done, and I think we need to make sure that when we are auditing things, we have to even conclude those documentation in time, because audit done, conclusions reached, we have finalized our reports, and if things are not documented in time, that it makes no relevance to it. So you need to make sure, one need to always make sure that things are being archived, things are being closed, documented well within time. So assemble the audit documentation in audit file and complete the administrative process of enabling the file on timely basis. And this is also discussed under SA 230. There are certain timelines being given. All different firms have their different timelines basically, but the best approach is to make sure that once audit work is done, it is been getting documented on real time basis, and when you are issuing your opinion, all your conclusions are backed up by your documents. So completion of audit file, and it doesn't not involve the performance of new audit procedures. So once you have issued your report, you are not basically, and in anywhere practically even, you don't need to do any additional audit procedure because you have already made a conclusion and issued your report. So your documentation should be complete to that extent that there is no further procedures that you are going to add after issuing your opinion. If you are doing even anything, that is more of administrative. It's more of basically if there are any cosmetics or something needs to be cleaned up to make sure that there are no irrelevant things put into documentation. To that extent, it appears reasonable. Otherwise, your documentation has to be complete and files should be archived on time. If there are any modifications, and also there are retention period been defined under SQC requirement. So there is a retention period as well, which also been discussed under SA 230. And in the circumstances, even if we are modifying anything after the conclusion of audit, that's not very critical, or even if critical, I think one has to make sure that they are documenting the reasons for that and making sure that what are the specific reasons for changing those, when and by whom they were reviewed and agreed. So we move now to the stages of audit documentation. So I think it's very general that we do a very pre-planning before entering into the planning, that what kind of client is, what is the client's expectation, what are their timelines, what could be the complexities in the industry where the client belongs from. So one is the very pre-audit stage, which is also include the client acceptance procedures at time. Then second is the planning stage, that considering understanding the which involves understanding your client's business, your environment in which your client is operating, their overall structure governance, Then it includes execution, that basis the planning what you have planned, that how we are approaching going to be approaching to that audit at various stages. Then you execute basis your plan, and you keep reviewing your plan, because execution doesn't says that it has to be only at the planning stage. It says that while executing, if there are any changes that needs to be reviewed, please keep reviewing your planning and update your expected procedures to do. And then we reach to the conclusion stage, where basis all our execution, we finalize our procedures, we document those, we review those, confirm our conclusions are aligned, and then we reach to the conclusion stage to sign off the reports. So we will cover each of these stages in next few slides, and try to just put across what kind of documentation at each of these stages are very important, which one should try to see that these are at least there. And again, I would just like to put across a small caveat that whatever we are discussing now, we are going to discuss in next 1 hour. These are all basis our experience. These are all basis coming out of the auditing standards requirement, and these are all personal, but this is from our experience what we live. This is very important, at least you one should have this. There can be difference in the nature and manner of documentation, but in essence these things needs to be there. So coming back to the pre-audit stage, where the examples of audit documentation at this stage could be following, that one should make sure that there are KYC procedures being documented for each of your engagements, your engagement acceptance, and if there is a new client, then your client acceptance procedure. And generally KYC procedures are done when the clients are new, and if there are any significant changes in the basically structure of your client or in terms of shareholding or something, then again KYC procedure should be reviewed. So you should document your engagement acceptance formalities, continuation, evaluation. If there your client has got into different segment of business, or some businesses are basically regulated, non-regulated, those could even change every year or possibly in 2 or 3 years. So one should continue to make sure that we have adequate experience to audit such kind of businesses, and whether we are comfortable to do those kind of audits. So we should do keep continuing the evaluation. Companies that compliance, basically where say we might be appointed as the auditor for the first year now, or maybe we are someone rotated out and we are getting into it. So make sure that we have documented all the compliances, including board resolution, shareholder resolution, and resolutions required in the Companies Act. We need to obtain, wherever we are getting in as auditors, we need to obtain NOCs from the previous auditors. This is even from our code of conduct for the engagements where we are getting into it. Make sure we have the right level of engagement letters. We have the agreements agreeing to the terms and conditions with our audit clients. And your engagement letters needs to be really precise, clear in terms of your scope, what all things you are supposed to cover, you are going to cover as per the requirements under the framework. That all needs to be very clear. Those should be signed before you start your engagement, so that you are clear in terms of the scope with your client. And make sure that all ethical requirements, including independence, are very well and precisely documented. All the firms, even on the quality standard, this is very prerequisite, that whatever wherever we are doing any assurance work, wherever we are issuing any sort of reports, we make sure that we are independent in terms of our code of ethics, because we also give our independence declaration, we state that in our reports and all. So make sure that we have adequate procedures, ecosystem defined within the firm, to make sure we, our team members, are ensuring that they are independent. We are recording those independence for our engagements on our files. Then we move to the planning stage, and at the planning stage, we document the overall understanding of our client, like what is the business of our client, what is the economic, social, economic environment, geopolitical environment in which our client is operating, what are the external factors that are affecting the overall industry, what are the possible factors that are affecting our client businesses. So we understand everything, and then we review our overall strategy, and we put across our audit plan. And we keep reviewing, as I said few minutes before, that we keep reviewing our audit plan if there are significant changes. Significant changes could be in terms of that there could be some update regarding your products of your client. There could be some regulation which is coming in which becomes regulated, or there could be some complications where your client's products are getting kind of challenged by any regulators or are under inspection. So you need to make sure that you are reviewing your audit strategy in terms of any business updates whatever happening. Then your audit documentation of the risk assessment. So SA 315, which is identifying and assessing the risk of material misstatement through the understanding of the entity and its environment. That includes discussion amongst the engagement partner, key engagement team members. And by saying that other key engagement team members, I don't mean to say that other team members are not important. While everyone is important, but make sure that any of the particular complex area or anything which has been done by any specific team members, so those are all the key team members who should keep discussing regularly. So there has to be a regular discussion, and those discussions should be documented, that to what extent in the discussions were being covered, what all the thought process of brainstorming being done, whether the team members are suspecting anything in relation to entities financial statement which could be subjected to material misstatement, or there are any applicable financial reporting framework to the entity, or any circumstances where any of the particular framework is not getting applied or something becoming impractical. These are the areas where if there are such observations, if there are some skepticism around it, engagement partner, other team members, any experts on the engagement, if someone needs to consult someone or understand from someone else's experiences, even if we are doing them, then I think we should still document that all at the planning stage, that how we have reached to or planned some procedures, what are considerations we have taken. The key elements of understanding, and which includes the entity and its environment. As we discussed, the external factors, reporting framework, nature of operation, and this is all. And all identified risk at the material mistake of risk of material misstatement and financial statement, and even including the assertion level. Assertion, we all understand assertions are regarding, say, for example, completeness, rights and obligation, occurrence, measurement, etc. So at assertion level, including the underlying related controls. We all know that now controls have taken equivalent importance in the as part of our audit. We have been issuing now for years the report on ICFR. So controls are equally important, and auditor's assessment of all significant risk and underlying rationale for those. So there are significant risk on the engagement, there are fraud risks on the engagement. So one has to make sure that what is leading to fraud risk, because fraud has even the like kind of factors which we need to once understand before reaching to a conclusion, which could be incentive, which could be pressure, which could be something else. So all these things needs to be properly documented, that even key areas, for example, revenues or impairments, if those are leading to assumptions around impairment, if those are leading to something which are affecting these areas, so whether that's a fraud risk or whether there's a significant risk. So one need to make sure all the assessment, whatever the risks are identified, those are being documented with the underlying rationale. All significant discussions, decisions within the team, please document as part of your planning stage, so that it's easier if at time you have to go and revisit your planning, it's easier to understand what all considerations you have already taken into consideration. Identified and assessed risk of material statement due to fraud, that should be documented, and that should be documented at assertion level. So for example, if one is identifying cutoff as fraud risk, so that is occurrence as a fraud risk at the revenue, or measurement is a fraud risk. So those needs to be documented at that level, that what are the reason. In situation where we are reaching to a conclusion that the preemptive fraud risk, which is fraud risk towards revenue, if there is no fraud risk, then it is again very important for the one to document the reasons why someone believe that revenue is not a fraud risk. And please note the words revenue, why revenue is not a fraud risk. If that is the decision that engagement team is taking, they need to make sure that they are documenting that why revenue is not a fraud risk, because that is a preemptive risk which one believes. And the results of all the audit procedures around, so revenue is one of the area, then any other fraud risk or management override of controls. If engagement team believes there are no such risk, then it becomes very important. If they believe there are risks, then what are the contributing factors which leads to the engagement team's judgment or understanding that this is the risk, at which assertion level, what are the kind of procedures that we are applying to those. And at the planning stage, very importantly, one has to determine materiality, because that materiality is the factor which we apply to the whole audit. We always work basis the materiality defined, at the account level, at the assertion level, sometimes when necessary, or we define the materiality and then apply our audit procedures that which area or which account captions are material, and if there are any non-material, then we do our procedures differently. One also need to understand the legal and regulatory environment in which your client is operating and document that appropriately. There could be possible situations of non-compliance with laws and regulation, which we say as NOCLAR. One need to understand those, make sure your team is inquiring with the right set of people who are aware of, familiar with the regulatory environment in which the client is operating. They are talking to them, they are understanding the environment, and they are documenting the possible nuclear issues that could pop up. And if those are getting resolved, we are able to verify those. Please document the procedure performed towards that. So we covered two stages. One is pre-audit stage, then another one is planning stage, wherein we said that why at the appointment level, broad understanding like what is the client, what are the basic appointment formalities to comply with the independence and all. Then we stepped to the planning stage, wherein we try to cover that whatever we are planning, whether be materiality, whether be the assessment of risk, whether assessment of legal environment, or any at assertion level, whatever the risk assessment we are understanding, we need to make sure we are summarizing all our discussions between the team, all our understanding, all the factors that are contributing to reaching to a conclusion that this is the way we have to plan our audit approach. Those are all documented. And now we move to execution stage. So execution stage largely is the heart and very critical stage of the whole process, wherein this gives us all the leeway to go even back and understand that if there is anything which we need to revisit at the planning stage, we can, and we should always review that and do it here. So at this stage, the documentation include the procedures performed that are appropriate in circumstances. And I'm just reading this line because this is very important. That procedure performed that are appropriate in circumstances for the purpose of obtaining audit evidence. And the procedures could be all the procedures which are important to that particular line item and to address the audit assertions, risk at the assertion level. So that includes physical inspection of your assets or inventories, or if there are any specific acquisition being done. I think we should be skeptical enough to review or to assess that in case if we need to visit any site physically to make sure that these things are getting accounted appropriately, the existence of a particular asset or inventory or particular machinery, one should do physical inspection. Verification of audit evidence, that says all underlying documents, be it the contracts, be it the copies, be it the LR copies, be it the invoices, or there could be management agreements, all those documents which forms part of the basis of the transaction, one need to make sure that verification happens. All the observations, external confirmations, re-performance, any inquiry procedures, all those things done are getting documented. And when information, and these information is used as audit evidence. And wherever we are involving management experts, we in the sense wherever company is involving expert, I think we should also try to evaluate from our audit procedures and applying skepticism that whether the experts whom company has employed are really expert, or they have that adequate knowledge in a particular field where they are being considered as experts. So we should evaluate their competence, their capabilities, objectivity of that expert. That expert's scope is been defined very appropriately, that expert has the experience to do that kind of job, and that forms our basis to get the comfort that management has done adequate procedures for involving an expert, and that area really needed an expert's attention. Then what are the, basically when designing test of controls and details, so basically when we do controls testing and then when we do substantive procedures, audit procedures, so auditors shall determine the documents and means of selecting the documents. So what is the sample, what were the population, how you did sampling, because everything has to be basis because you apply materiality. So you in the big data environment, one will definitely not be able to vouch each and every invoices. What one could do the best is that definitely they have to do sampling, they have to identify to what extent, but whatever manner one is selecting the samples, they document that approach and rationale. So document those for the processes, document the audit samples and the testing and the characteristics you note on the audit samples, that what exactly one has reviewed, one is verified on those. And if there are any observation, those should be documented to be discussed with the client. So whenever there are areas which requires more than routine audit experience, because we generally look at the numbers, we generally look at the kind of transactions from our experience, whatever we have ability to look at. But there are certainly certain areas where we need expert of certain, where we need involvement of certain experts, which includes could be financial metrics or the assumptions like WAC rate or something, which probably on day-to-day basis we don't do. So we involve experts from our side as well. So if an auditor is involving an expert, at the same time, one auditor should also assess that expert is has enough knowledge and competence to support us as our expert. So that expert should be from the field where he has that expertise, and we need to make sure that expert is aligned with our firm's quality, our focus on quality control and stuff. If he is not aware of, we should make sure that he is subject to that, that he has adequate level of knowledge, what is the risk that we are looking at, and how we are trying to cover that. And that's the way one has to evaluate the adequacy of experts involvement, and then certainly the work of an expert. So work product of an expert again becomes our responsibility, because when we issue a report, then whether work has been done by anyone, but we take into consideration because we are involving them to support us. So work, even deliverable of the expert, we should make sure that we are understanding them. And if we have any sort of questions or confusion, we should make sure that we are talking to them, we are understanding if those things are, and our understanding gets documented, we document it somewhere. Often it might not be possible for everyone to remember everything, and that's where the documentation plays all the help and support. So one has to document that what procedures one is doing on involving an audit expert as well. I think we'll now touch upon few of the very specifics, like external confirmations. So external confirmation, which are the areas where we do external confirmations? So wherever we need, wherever there are significant balances which are lying with someone, and which the other parties like customers or vendors or banks or financial institutions, kind of borrowings, cash and cash equivalents, investments, mutual funds. So these are the balances which often becomes very significant, and these are the areas where we roll out the external confirmation, wherein we expect the direct confirmation coming to us. So direct confirmation, there is certainly process defined on the external confirmations, which is defined under SA 505, and wherein it involves a lot of understanding and documentation of that understanding. So auditor shall maintain that level of understanding to why the external confirmations and to whom they were rolled out. If there are certain materiality applications being done, that whether these balances are material or materially been applied, or samples has been identified on that basis. So document the basis rationale of identifying all those samples, and then make sure that one has the complete control over the confirmation process. So to initiate the confirmation process, one would do sampling. Then one would roll out the samples, make sure that management is been informed, request has been sent, which is signed by the management, that send the request to the auditors directly. And then one to keep a tracker of that. So your documentation also include a tracker of the external confirmations, that to what extent, to what count of external confirmations you have sent to people. If there are follow-ups needs to be done, because often we don't get the responses quickly once or twice. So one need to make effort to follow up for the confirmations again. So if you are sending out reminders for seeking the confirmations, give back reminders and track those reminders, that we have sent the reminders on this date. And if there are confirmation which you have received, if there are differences on those confirmation, document the differences, talk to the management, seek the reconciliation if possible. If there are differences and you believe that something you want to communicate back with the person confirming the confirmation, do discuss with that, and whatever discussions or the procedures you are performing, all those needs to be documented. So designing confirmation request, sending what request we are receiving, and if we are using any digital mode of sending out confirmations, I think that is also a very important area and focus where we need to make sure that we are doing the right things in terms of using the digital space, and we are documenting what we have done. So, for example, if we are sending out confirmation through email to someone, so while we are taking the emails from the client, we try to see that domain exists when we are sending the emails. If there are emails being bounced back, we are documenting those and then discussing those with the client or those charged with governance. If not, then when we are getting responses digitally, we are again checking the domain testing. We are doing domain testing and documenting those. Often we have seen the situations where people have sent the confirmation, people have received the responses, but where there are differences or the amounts has been significant. People have even done, and in fact, I am myself done. We have called back the person sending the confirmation. We have did the callback procedures. So if we are doing those callback procedures, I think we should also document that why we did the callback procedures, with whom we did the callback, with the person. We should document the designation, name of the person, time of callback procedures. And it's always suggested, basically, if you are doing callback procedure, probably it's better to get any one of your colleagues together, that you have done this, so that we are comfortable to state everything, that these are the discussions which we monetize. Because it may be important that might get some sort of feedback which you believe is important for you to record as audit evidence, so you need to minute that. So these are the kind of procedures that you should make sure that it is happening, it is documented. In case where you are getting into a language sort of issue, then one need to basically try to sort out that how you get comfortable, whether you want the changed versions or the basically translated versions, or those translated versions, whether you want those to be certified by someone, or whether you are comfortable to accept the translated version coming in from your client, or one understand the vernacular language or any other language other than English or any local language. So if you are doing that aspect as well, please make sure that you are documenting those as well, that where you have taken a comfort on the translated version, that this is a translated version, this is the original version, and this translation has been done by them, and this is the way we have been comfortable with that. Yeah, Sanjay. Sanjay, you are on mute.
Right. Hello. Good evening, everyone. So moving on to auditing accounting estimates and related disclosures. So first is, identifying the accounting estimates and the judgments that have been made in the preparation of the financial statements in accordance with the requirements of the applicable financial reporting framework. So these accounting estimates can typically include, say, impairment test of property, plant, and equipment and goodwill, recoverability of deferred tax assets. So first and foremost, we need to perform a risk assessment procedures wherein we identify the accounting estimates. We identify how management identified those accounting estimates and the events and conditions that lead to the accounting estimate. What are the assumptions that are used in making the accounting estimate? What is the kind of model that the management uses, and the data or the input that goes into the model? So typically for, say, an impairment of property, plant, and equipment or goodwill, whether the model used is the fair value model, or whether the model used is the value in use model, and whether this model itself is compliant with the requirement of the accounting standard, and whether this model has changed from the prior years, and what is the reason for this change. And we understand, when we are doing a risk assessment procedures, what is the level of estimation uncertainty, and how does this estimation uncertainty ultimately impact the valuation assertion of the subject matter that is being audited. So what can be the level of change of WAC that can, give rise to a material misstatement, say in valuation of PP&E or valuation of goodwill, or what is the sensitivity that can be applied on sales price or shipments assumption that can give rise to a material misstatement. So we perform a full-fledged risk assessment on each of the assumption that goes into the preparation of this accounting estimate, and we identify significant assumption or the critical assumptions from these accounting estimate. So once we have identified the accounting estimate, and once we have done the risk assessment procedure, then we can plan an appropriate response to auditing these accounting estimates, and these response would typically include uh, an understanding of events occurring up to the auditor's report date. Say, for example, in case of an impairment test where projected financial information is being used, so we typically understand, up to the auditor's report date, how these estimates have moved in terms of actual. So for example, if the EBITDA has been, forecasted for 5 years, or the uh, uh, free cash flows has been forecasted for 5 years, we understand uh, uh, the actual cash flows and the actual movement up to the auditor's report date. And we test how the accounting estimate and the data has been used, what is the appropriateness of the method. We also test the operating effectiveness of the controls, in terms of how the management has made those accounting estimate, and we design appropriate substantive procedures. And based on our market intelligence and based on our benchmarking of those assumptions from externally available information, we try to develop an own point estimate or own range of our own range as compared to the management's estimate, and we try to identify if the management's estimate or valuation is within those range. And further, if we identify significant risk in respect of any of the accounting estimates, we also develop alternative assumptions or outcomes, and we see if overall the alternative assumption or outcome is within the range that management has determined. We also do a reasonability assessment of significant assumptions. When we say a reasonability assessment, whether those assumptions are supportable, whether those assumptions are observable from, external market data or public domain. And we also do a look back analysis in specifically to identify whether management has the intent to carry out specific course of action, and whether the management has the ability to carry out specific course of action. When the management says that, the cash flow forecast would increase by so and so percentage over a period of years, whether this is supportable by past data, whether management's what is the accuracy by which management has made estimate in the past, uh, and whether this is also supportable by industry data in terms of the growth for that respective industry. So moving on to the next topic, when typically identifying related party transactions. Again, first we do a risk assessment, whether we obtain a complete understanding of the related party transaction, whether these related party transactions are something that is normal for that type of entity, or whether it is something that is outside the normal course of the entity's business. And whether if it is outside the normal course of entity's business, whether any significant risk or fraud risk need to be identified with those related party transactions. We perform procedures to ensure, completeness of related parties identified, completeness of transactions with related parties identified, and ensure that the related disclosures, etc., is complete. Uh, in cases where, there are transaction outside the normal course of business, we understand from the management the underlying contract, the arrangement, the business rationale, and whether the initiation of that transaction in terms of who authorized it, who approved it, what is the nature of diligence that was performed by the management before entering into transaction. These are the type of uh, questions that needs to be answered, and ensure that our audit files have enough documentation that these answers are being demonstrated. Wherever we say that, wherever the management asserts that transactions with related party are at arm's length, we ensure that we document that assertion. We have an audit plan to audit the arm's length of the related party transactions, and we ensure that our documentation is able to demonstrate how we planned and how we performed that audit. And uh, even from a caro and companies act perspective, we ensure that, our documentation is able to demonstrate the compliances with the companies act, and what are the procedures that we had performed before reporting and concluding the reporting matters in the caro. Pritesh, passing on to you for the subsequent event.
Yeah, thanks, Sanjay. So in terms of subsequent events, it is also equally important, I think. And subsequent events are events that are happening after the balance sheet date, but before signing of our report. And importantly, we need to understand that if there are any significant changes during this period which could affect the reader in terms of understanding the transactions, or if there are any existing transactions which are getting concluded, or if there are any significant updates. So all this, how do we identify or understand all this, or what procedures do we do? Whatever procedures we do, we need to document. So we do understanding procedures basis inquiry with the all the right stakeholders, say for example, head of marketing or head of finance or treasury or CFOs or CEOs or whoever. So if we are doing those inquiry procedures, we need to make sure we monetize those and document those. If we are there are any change in the understanding of business or any significant processes, we understand those, we document those. Reading the minutes if there are meetings happening after that, and those minutes minutes of the meetings, whatever are being conducted, be it audit committee, be it board meeting, or be it shareholders meeting, or any EGM. So all those minutes, we are reading it, summarizing it, documenting it to demonstrate that we have performed all required subsequent event procedures. That if there is anything which is impacting your financial statements in terms of numbers, which we call as adjusting event, or any significant disclosure which reader need to understand, which we call as non-adjusting event but significant for a reader to understand, we need to classify those. We need to document the rationale of such identification and disclose that. Basically, in terms of our documentation, we do that, whatever disclosures we are making in the financials. In terms of going concern, very important, because again, we are reporting this in our audit reports that financials are being prepared by the management on going concern basis. Even in the ratios where we talk about in the CARO, we refer to the ratios now, where we say that management is prepared this on the basis of going concern. So going concern is also very important. And likewise, documentation of going concern at times, and we have seen people missing out on such documentation, because at times this loses relevance because people focus on the execution hardcore. But this is really very sensitive, and this needs a lot of skepticism, probably senior level involvement as well, in terms of understanding that what are the aspects one need to cover in terms of going concern assessment. But whatever has been done, I think right from the planning stage, this needs to be very critically understood, sensitized within the team, and documented that what all things team needs to keep in mind while execution of going concern as well. So when management has not yet performed any sort of assessment, then also it is important that we talk to them, we understand them with them, that if there are any factors that they need to consider, they do that and they advise us. Because if there is any material uncertainty exists, that needs to be addressed. And then evaluating management plans for future, because going concern is what we say that management will be able to conduct their operations for next period of 12 months at least, from the date when we are signing our report. If that is the case, then we say that it is financials are being prepared on the going concern basis. How one identifies or how one verifies that? So one may need to look at if there are any change in future plans, if there are new product lines, or if there are new businesses which are going to get shown, or if existing business is suspected to any sort of restrictions or any regulations or any bar from any of the environmental authorities or whatever. If there are those cases, one need to make sure that those factors are being considered, evaluated, documented, and as part of our going concern assessment, and are put in our work papers. And now, so basically, we have tried to touch upon a few very specific aspects of audit and what kind of documentation is critical in those areas. And now, if we talk about the conclusion stage, I would like to go each of the bullet here. That audit conclusion shall be clear and cross-referred with your work papers. So when we talk about documentation, documentation should always make sense. It's not just a matter of just that we did this, we put across here and there. That doesn't make any sense. For a document to be documented, it has to be very clear and cross-reference with the work done and with the conclusions reached. There has to be rationale for identification of key audit matters. So we all know that listed companies are now, from the past couple of years, listed companies are required to report on key audit matters in accordance with 701. So rationale of reporting the key audit matters should also be documented. That why, or as an auditor, we believe that a particular matter should be identified and reported as key audit matters in our audit report. Documentation of any sort of material misstatements or audit adjustments identified. There can be certainly situations where your clients might have missed any of the adjustments which are critical or material to the financial statements, which probably we might identify during the course of our audit procedures. So document those kind of misstatements and audit adjustment, and make sure that you are letting this or informing this to those charged with governance in your audit committees or in the manner of communication, whatever the approach you take. And if applicable, document the basis if there are any qualifications or matter of emphasis in your audit report or CARO report. Make sure your work done is being cross-referred. You have complete basis of raising that modification or any sort of remark or qualification in your reports. All those has to be backed up by your documentation, and your work done should be cross-referred to that. Documentation of review of other information as required under SA 720, which often includes board report or the annual report or any other information, which by reading we can lead to a situation that the information given to us at the time of audit is not in line with that. So that is also important, that one has to document it appropriately, that he or she has read the other information. They have tried to understood that there is nothing deviating from what information we have been given, and we have made the basis for our audit. Documentation of audit procedures performed in relation to 143, which includes your CARO and ICFR. So all those, basically all the CARO clauses, all the 2120 clauses, whichever they are talking about, each of the clauses should be documented in detail, that how and what conclusion we have reached on each of the clauses. Likewise, ICFR is an extensive. Sanjay is going to just discuss about ICFR in the next slide, but it is extensive. So make sure that about ICFR also, whatever controls, whatever is control metrics we have seen, controls defined, those controls are being tested adequately by the management and by us as audit team. What management has applied procedures, what we have applied procedures, all those should be documented precisely. And the reviewer should make sure that he is also understanding the clarity of the documentation. And likewise, matter of those charged with governance. Yes, Sanjay.
Thank you, Pritesh. So specifically with respect to auditing internal financial controls, there is a guidance note which is very extensive, issued by the ICAI, and we've tried to summarize, as much as possible from that guidance note. So first and foremost is to identify, the significant class of transactions, and to identify the process flow for each of those transactions. And when we identify the process flows, we obtain an understanding of the IT application or the IT software, including, information produced by the entity and how those information is produced, whether this information is a system generated IPE or whether this is, something that is a manually prepared IPE. So we obtain a full end-to-end, from initiation to the reporting stage, the end-to-end process flow for each significant class of transaction. We obtain an overall understanding of the IT general controls, and what are the management's processes for user access control, what is the management's process for program change controls, what is the management processes for backup. We obtain a complete understanding, and at this stage, if we need to involve IT specialist in our IT specialist in our team to obtain an understanding of that, we do so. And we obtain an understanding of the entity level controls, which is very well described in the ICI guidance note. So we obtain the company's control framework in respect of ELC. What is their process of monitoring? What is their monitoring activities? What is the management's or the company's process of code of conduct, and how the code of conduct and the ethical values, etc., is communicated to the employees? What sort of trainings management provides to employees, specifically even in terms of accounting topics and even in terms of ethical topics? What sort of controls that is provided, trainings, etc., that is provided to the employees? And in terms of say significant estimates, and in terms of financial performance review, how management monitors those and how management reviews those. So these are specifically typical when you understand entity level control. And then based on this understanding, we plan a strategy to perform the audit of internal financial controls as per the ICAI, as per the guidance note issued by ICAI. Typically, we also, in respect of each of the IPs that we have identified from our understanding, we understand, based on the type of IP, what are the type of IP risk that would be involved. So if it is a system generated IP, there could so the IP risk would generally involve whether the input parameters that is used by the company to extract that IP is correct, whether that IP or the system report that is being generated, whether that is relevant for performance of that control, whether that is the right report that should be used for performance of that control. So whatever data that goes into that report, what is the source of that data, and whether that source is being subject to control, whether that source, there is appropriate controls designed for this, the data that goes into that IP, into that report, and overall what are the configurations of that report, whether system is configured appropriately, that report is being configured appropriately, and the mathematical calculations in that report are appropriate. And if there are any manual IPs, whether there are enough review controls in place by the management uh, to uh, uh, to ensure the mathematical accuracy and everything of that report. We ensure that based on the above, uh, we de- um, we design procedures to test we design procedure to test the design as well as operating effectiveness. So test of design is typically performed by performing a complete end-to-end walkthrough, and where we obtain samples of transaction, and we obtain a complete understanding of end-to-end process, and we cross-refer that to the controls which the management has asserted is there in place to ensure that the control is indeed designed. And for testing the operating effectiveness of controls, we obtain samples as per the based on the frequency of the performance of that control, etc. We obtain samples as per the ICAI's guidance note, and we test the operating effectiveness to ensure that controls that are designed are operating in the same manner throughout the population. Uh, Specifically, also in respect of management review controls, we perform enough procedures to understand that we have a complete understanding of who is the reviewer, the competence, objectivity of that reviewer, and what are the attributes of that review in terms of whether there are any review thresholds, etc., defined or designed within that review control, and whether that review threshold is sufficient and appropriate, and what are the sort of questions that the reviewer has asked, and what are the sort of questions that the preparer has responded, and how ultimately it is important that we document in our work papers that how the reviewer got comfortable with that particular aspect that he's reviewing to to ultimately conclude that the control is designed and operating effectively. Uh, and then once we have done a complete assessment of all the SCOTs and all the management review controls, if there are any deviations identified, we include in our documentation whether those deviations are control deficiency, whether it is a and whether those deficiencies, whether there is a compensating control for those deficiencies, or if no, whether management has identified remediation plan for addressing that deficiency, and that remediation plan, the control is indeed remediated before the balance sheet date, and whether we have tested that remediation, management's remediation testing, and we conclude that the control is indeed remediated before the balance sheet date, and it is operating effectively and designed effectively on the balance sheet date. So once we have all this ready, for all the unremediated controls, we identify whether this needs to be a control deficiency, whether this needs to be a significant deficiency which needs to be communicated with those charged with governance, or whether there is any material weakness which is unremediated as on the balance sheet date, and which ultimately needs to impact, which will impact the audit report. And also in respect of the deficiencies that we have identified, whether any incremental procedures needs to be performed to conclude on the financial statements, whether the deficiencies identified impacts our substantive procedures, and any this results in increased risk from a substantive point of view, and we need to focus more from a substantive procedure point of view to conclude on the FS. So these are typically certain bullet points of documentation that needs to be included when auditing internal financial controls. And specifically when talking about internal financial control, uh, it is uh, it is management's responsibility to maintain internal financial control, and management is also equally responsible, uh, specifically for listed companies and also for unlisted companies, wherein in the director's report they need to assert that the controls are operating and designed effectively. Uh, so indeed, management also need to have their assessment uh, of how each of these controls that they have identified for the respective significant class of transaction, their assessment of how they have assessed it to be designed and operating effectively. Also, where there are significant one-time transactions or complex transaction, so management also need to include the documentations of how, what is the conclusion that they have reached in respect of those complex transactions. Say, for example, a business combination or an impairment test of goodwill or ppe or trade receivable. Management needs to include documentation of what are the risks that they identified in respect of the transactions, what are the controls in place, and how those controls were designed and operating effectively to address those risks, and essentially a complete uh, a documentation to demonstrate that the financial statements are not misstated because of these significant one-time transactions. So these are certain contents of a good quality documentation, that it should be sufficient, it should be sufficient and appropriate, it should be self-explanatory, it should be very clear and to the point, uh, with ensuring appropriate cross references to any other work paper or the financial statement conclusion or the audit report conclusion. It should identify, it should ensure that all the risk etc are identified and the procedures performed are mitigating those risks, and there should be enough review. The documentation should be able to demonstrate that an experienced person from the audit team has reviewed it based on the risk assessed for that particular area. So just a few examples, sorry, just a few examples. Just give me a minute, I'll present my screen again. Right. So an example of, say, a materiality determination work paper, which should clearly include, the basis on which materiality has been determined, and how this basis is relevant to the users of the financial statement, because a materiality is driven by uh, the basis which is relevant for the users of the financial statement. And how the engagement team has ensured that other basis, like say an activity based measure or a capital based measure, is not relevant. And then essentially some sort of haircut just to ensure that at the conclusion stage the materiality is not significantly different from what is determined at the planning stage. And what is the percentage that the management that the engagement team has applied. It can typically range from 5% to 10% of PBT, or based on the measure that is applying, that the engagement team chooses to apply. So what is the percentage that the engagement team has chosen to apply? And as I said, uh, who is the preparer of this document and who is the reviewer, and an overall conclusion of how this is appropriate for the audit of the financial statements. Moving on, say an example of a bank confirmation work paper. So a clear documentation of all the work done. Uh, if there is any bank confirmation in foreign currency, then also documentation of what is the basis of exchange rate and how the company has ensured that the exchange rate is appropriately used. What was the balance that was confirmed, and if there are any differences, reasons for those, and a reperformance of bank reconciliation statement. Uh, Also, a clear documentation of the mail sent and the mail received, typically in respect of bank confirmation, and a similar sort of documentation in respect of even fixed deposits that is confirmed from the banks, and a documentation, as Pritesh had discussed before, of the domain that was being verified. And typically in respect of bank confirmation, where other information like outstanding trade bills or outstanding LCs are also confirmed, uh, how that can be traced back, and the ultimate treatment in the financial statements depending upon the financial reporting framework, whether it's a trade payable or whether it is a borrowing, it would depend on the respective financial reporting framework, and tracing those information also back to the financial statements. So this is a typically an example of a bank confirmation work paper, including of course who performed and reviewed the procedures, and overall engagement team conclusion in respect of the same. Okay, there's some trouble with the revenue work paper. I'll try opening it again. And also just an example of say impairment testing work paper. So typically a sort of memo which addresses how the risk assessment was performed, how the ICFR aspect was audited, and how each of the significant assumptions were being audited. Again, who prepared it, who reviewed it, the name of the entity, the CGU that is being identified, the carrying value of the CGU, and what are the significant assumptions or significant risk identified. And then typically in terms of control, what are the control attributes identified for each assumption, and who is the reviewer, and what are the IPs involved, and what are the review comments and how those review comments were addressed. And then a documentation of substantive procedures for each of the significant assumptions that were identified. Sorry, there's some issue with the
Maybe I think Sanjay, you can just summarize like kind of what.
yeah, yeah.
Yeah.
So in terms of revenue recognition, specifically say what is the what is the streams of revenue, uh, what is the audit strategy for auditing each of the revenue stream. Specifically, when auditing revenue recognition, um, typically in case of a say manufacturing company, what is the performance obligation for each streams of revenue, and when identifying cutoff based on the respective incoterms of the respective nature of revenue, what is the lead time analysis, and what is the basis of selecting samples for cutoff, and how and what are the documents basis which engagement team has assessed that the risk and rewards and the control of the goods has been transferred to the customer. This will include say a lorry receipt, or this will include a customer acceptance note, depending upon the nature of revenue, depending upon the incoterm agreed with the customer. So the audit documentation in terms of revenue recognition should ensure that all these aspects are being covered, and it uh, and the audit file is demonstrating that the performance obligation and the compliances with Ind AS 115 has been appropriately audited.
And I think these few of the areas are really very critical in terms of revenues or say impairment or inventory valuation, because these are the areas where there are significant adjustments which are expected sometime pops up. So your documentation, because these are even prone to your management override of control, so your JE testing or general vouchers if you're testing, I think all those things are very important that we apply the, so right from the planning we keep our approach documented, what are procedures we are doing. If we are changing our procedures, we are making sure that those changes are being discussed within the engagement team, monetized and documented, because revenue is the area which is prone to fraud risk as well. So your fraud risk documentation has to be really, really very strong. So you are documenting the right level of samples that you have mitigated by performing X, Y, Z procedures, and those procedures are all documented, reviewed, and then signed off. Maybe Sanjay, we can move on to the last slide now.
Yeah.
So with this overall, I think we have covered the stages of audit documentation. We have discussed some specific aspects around the critical areas, reporting areas, and we have tried to cover what should be the minimum documentation one should consider, and references we have included, like about ICFR on the other auditing standards. And we'll just summarize now the key takeaways from all the discussion. And as I said, that these are really personal at this stage. We are sharing our experiences and summarize this here. So prepare audit documentation on timely basis. Make sure your files are closed on timely basis. Those are been retained as per the requirement of auditing standards and your respective firm policies. Then your audit documentation should be very self-explanatory for the reader, that enables to understand the nature, timing, and extent of all your audit procedures, the results of all your audit procedures performed, evidence is obtained, verified, how you have reached to the conclusion, who have reviewed it, if you have taken support of any external experts, document those, any significant judgments, estimates, or any specific evidences that you all have taken into consideration, or any external internal factors that have affected your judgment or conclusion. Please document those things. Make sure if incremental procedures are performed, if professional skepticism has been applied, or there has been any other inputs from any related area, those are being interlinked, documented, and your fraud risk and significant risk are being precisely addressed at the assertion level. Make sure you're complying with your policies and procedures of assembly of your work paper within the time. Practice, and this is again very important, we are emphasizing that practice indexing, cross referencing your work papers with your audit conclusion. Make sure you are ensuring your firm's policies in terms of updated audit approach. If there are any standard documentation that you all are following, those standard documentations are in line with the auditing standard requirement. So this is all I think we have as on today, and we are taking a look at the Q&A section. We have only one question that someone has asked, that if we can share the presentation. So we can basically share that with the moderator. So again, thank you everyone for pulling up time and joining this session. Thank you.
Thank you, everyone.
Hello. Thank you, sir.
Yeah, thank you.
Thank you, sir.